Good morning, everyone. Welcome once again to the ICAI live virtual classes on cost accounting. And today our topic is joint and byproducts. So before we start with the fundamentals and the questions on joint and byproducts, let's understand what is the concept here. So sometimes what happens is when we process a product, some raw materials are there in such a way that when you process them, they split after some point, and during the process, and two or more products emerge. So it's like here is a raw material and you put it on a process and you put it to a process. When it undergoes this process, after some time, it gets split into two or more products. Let's say A, B, and C. In that case, it is possible that all the products are of equal importance. If they are of equal importance, then they are called joint products. So here, if A, B, and C all are of equal importance, A, B, and C becomes joint products. But sometimes after splitting, it is possible that one product is main, which you intended to produce, and other products are only ancillary to it, and they are produced only incidentally, and their importance not as much as the main product. Then we say that we have one main product, let's say main product A, and byproducts B and C, right? So the whole thing is you take some raw material, start undergoing this raw material goes under some process. So you employ some wages, labor, and overheads during the process or some other direct expenses. And then there comes a point when that gets split and you have two or main main products or byproducts. So that's the whole concept. And in this process, our concern is how shall we allocate the total cost up to the split off point into different joint products or main product and byproduct. So if there are main products, how are you going to allocate the cost which you incur up till this point amongst A, B, and C if A, B, C, all three are your main products? Or if A and B are main product, C is a byproduct, or if A is the main product and B and C are the byproducts. So the whole chapter, whole concept is what should be the most appropriate way or the best method in which to allocate the total cost up to the split off point into different products. This cost up to the split off point may be termed as joint costs or pre-separation costs. So you may call them joint cost or you may call it pre-separation cost. Example, like we have talked about this example in process costing also. When you process crude oil, you get different products. You may get petroleum, you may get kerosene, you may get diesel, you end up getting some lubricants or wax, you may get yarn. So these are different products. And if you look at these products, petroleum, diesel, any lubricants, wax, all these are also important. So when crude oil is processed, you end up getting many main products and maybe one or two byproducts. Similarly, in the sugar industry, when you process sugarcane to produce sugar, final product is sugar, and you also get molasses. So sugar is the main product, molasses becomes byproduct. A simple example which you have seen daily in your homes is when you churn cream. What happens? After some point, when you keep on working on it, you end up getting butter and buttermilk. So maybe you'll agree that this becomes the main product and this becomes the byproduct. You can further process. Another important thing is the products that emerge after split off point may be further processed. So when they are further processed, for example, the butter can be further processed into ghee. So again, what you do, you heat the butter and it becomes ghee, and you see that after some point ghee emerge and there is again some residue. So ghee becomes the main product, and this residue is the byproduct. You may further process this residue further, adding some sweeteners and all. You can convert it into sweet. So it is possible that whatever emerges after the separation, they can be further processed and they can be sold in the market after further processing, or maybe sometimes they are sold as it is. So we see that in the market, you can also have butter, you can also sell ghee. Both the things are sellable, right? So now our concern is, main question is, what are the different methods or how to allocate the joint costs or the pre-separation costs into different joint products or joint and main and byproduct. So there is a different way that we treat the byproduct scenario. Today our focus will be on joint products. So there are different methods. Number one is the physical measurement method. Two, we have net realizable value at split off point. And even if sometimes these two methods do not suffice, in that case, we can also have some technical estimates. So we can have some survey done and some technical experts may do some evaluation and they may tell us that most of the joint cost is like this part of the joint cost should be allocated to product A and this part should be allocated to product B or product C. How will the joint expenses be calculated for the product, right? If that's your question for the product, that is, we have seen process costing so far. We have seen that how much is the material used in the process that is given, how much amount of labor and overheads are incurred on the process. All that information would be given. So we will know that this is the expenses which have been incurred before the products got split, and after split, if there is some expenditure, that will also be mentioned. So costs would be given to us. Our job would be main in this chapter. The most important job is to allocate, to divide these joint cost or pre-separation cost amongst the various joint products. Today joint products, tomorrow we will also discuss about main and byproduct on the next session. So there are different methods in which you can allocate the joint products, joint cost amongst the various joint products. Prominent ones are physical measurement method, net realizable value at split off point, and third is the technical estimate. So sometimes when physical measurement or net realizable value do not seem to be doing any justice, or you feel that the resources used in the process do not justify these costs, which is coming up after separation, then you will maybe go for a technical estimate also. Apart from this, there are some other methods which may also be employed. For example, you can use the market value after further processing. So sometimes you can find out the market value of the joint products. So they are not sellable like that. You have to process it further and then you sell them. So then market value after further processing can be used. You may also use market value at split off point. So if the products are sellable at the split off point as well, then what price would they be sellable? And the total number of units into selling price will give you the market value at split off point. We will take the examples of each of them. The third one could be your average unit method. So maybe product A is made 1000 units, product 2 is made 200 units. So we will divide the total joint cost into 12,000 is to 1. And fourth could one also be contribution margin approach. So these are some of the methods in which we can allocate the joint cost and divide it amongst the different products. So physical measurement, net realizable value at split off point, and technical estimates. Apart from this, market value after further processing, market value at split off point, average unit cost unit method, and contribution margin approach. Apart from this, one more we may do towards the end, which is gross margin approach. So let's discuss them one by one. Yes, Arpita, if you have any question, please put it in the chat window. If it's raised by mistake, that's okay. Last one is contribution margin approach. So we will discuss them one by one. Contribution margin approach. So let's take up a small example and through which let us understand each of these methods. Raw material X is processed and after some time, two different products emerge. Both are important. Which are equal in importance. So they become joint product. Let's say 1000 kgs of raw material X is taken, which was costing us 5 rupee per kg. So your material cost becomes 1000 into 5, 5000 rupees. And then you started employing some labor on this. So which cost is another 2000 rupees. And overheads cost is 1000 rupees. So the total joint cost or pre-separation cost become 8000 rupees. Now, if we employ physical measurement method, let's say out of 1000 kgs, we had two raw products, A and B. So A was 800 kgs and B was 200 kgs. So 8000 of joint cost should be appropriated between A and B in the ratio of 8:2 or 4:1. So this becomes your ratio in which you will apportion the joint cost. So 8000 divided by 5 will give you 1600. So 1600 into 4, share in joint cost of product A. So you will call it share in joint cost. It would be 1600 into 4, which is 6400, and 200 into 1, sorry, 1600 into 1, 1600. So this will tell us that out of 8000, how much did you utilize for product A? It was 6400. And how much cost did you incur for product B? It was 1600. So we have allocated the total joint cost of 8000 amongst joint products A and B in the ratio of 4:1. So the cost, share in joint cost of for product A is 6400 and the share in joint cost for product B is 1600. Right? Continuing with the same example, but we have seen that sometimes in processes, when you process something, there can be some process loss also. Okay. 1000 into 5, 5000. Yes. So 5000, 2000 and 1000. Total cost is 8000. 8000 is to be apportioned between joint products A and B. We saw that A is 800 kgs and B is 200 kgs. And then we established the ratio on the basis of physical measurement, which is 4:1. So the joint cost of 8000 is to be divided amongst product A and B in the ratio of 4:1. So A will get a share of 6400 cost and B will get a share of 1600. But we have seen in the past that whenever you undergo a process, there can be some process loss. So for example, in this case, if 1000 kgs of raw material X is processed and you end up getting 500 kgs of A and 300 kgs of B, and then there is some normal loss of 200 kgs. Or you can say the waste is 200 kgs. Will not get into normal or abnormal loss. Waste is 200 kgs. But again, this loss is to be borne by product A and B. So if it is a normal loss, there is no abnormality. This cost is to be borne. Now, if you go by physical measurement, what will happen? 5:3:2. But when you allocate the 200 kgs to the waste in the ratio of the total cost in the ratio of 5,000, 3,000, and 2,000. But this is waste. The waste does not have the capacity to recover any cost which is charged to this. So what will happen? We will charge it back to the products A and B. It has to be ultimately borne by product A and B. So what we can do is we will allocate the waste to product A and B again, maybe in the ratio of 5:3. So 200 divided by 8 is 25. 25 into 5, 125 kgs should be allocated to A and 75 should be allocated to B. So we will divide the total cost of 8,000 rupees not in the ratio of 5:3 this time, but in the ratio of 625 is to 375. Okay. Ultimately, the ratio will be 5:3 only. But first you divide the waste back to process A and process B, or main product A and B in some ratio. So here, if we take once again for this also physical measurement, the joint cost should be shared in the ratio of 625 to 375, which is 5:3. So this is how you allocate if you follow the physical measurement method, right? So here the entire output was 800 and 200. There was no wastage, 1000 kgs of raw material, and physical measurements showed that the cost of the output of product A was 800 kgs and the output of product B was 200 kgs. So the ratio became quite apparent, 4:1. But if there is waste, you will charge the waste back to products A and B in some reasonable ratio. Here we have the physical measurement, so 5:3 again. And therefore, the joint cost should be allocated amongst A and B in the ratio of 625 to 375. So that becomes 5:3. Okay. If you will charge the waste in some other ratio, then it will be a different answer. Otherwise, here also you have 5:3. Here also you will get 5:3 only. Joint cost is not 800, joint cost is 8,000. Raw material cost, wages incurred on this, and overheads. So not just the 1000 kg raw material cost is to be a portion, but also the wages and overheads which were incurred before the product got split. So the total of 8,000 joint cost should be split amongst product A and B. I hope I have addressed your query. Joint cost 800. 8,000 should be in the ratio of 5:3. Yes, 8,000 will be in the ratio of 5:3. So 5,000 will be charged to product A, and 3,000 will be charged to product B. We had A 500 and B 300. And there was also a wastage of 200. Now the waste does not have a capacity to bear any loss. So the waste will again be allocated back to product A and B. So 200 kgs of waste, the cost of that has to be borne by product A and B. Now in what ratio will you divide 200? Once again 5:3. So 200 divided by 8 into 5. It's 25. 200 by 8 is 25, 25 into 5, 125 kgs of waste A will bear, and remaining 75 kgs of waste B will bear. So the total cost in physical measurement will be divided in the ratio of 625 ratio 375. So once again, this becomes 5:3. It will remain same. Why it will remain same? Why? Because this will not bear any cost. And this 200 kgs also you charge to product A and product B in the ratio of 5:3 only. So final answer will also be 5:3. However, if there is a specific mention that waste should be allocated to product A and B in equal ratio, in that case, might get a different answer. We already apportioned in the ratio of 4:1. Where what's the reason behind apportioning joint cost twice? Is that uh, this was the scenario, assuming no waste erupts. So if there is no waste in the process, physical measurement of A and B will be exactly equal to 1000 kgs. So you will allocate it in the same ratio. However, if 800 and 400 kgs 200 kgs did not become of A and B, for example, if there was waste, or case 2, if there is waste, and product A was 500 kgs, 500 kgs of product A emerged, 300 kgs of product B, and 200 kgs of waste. And it is a normal waste. So the normal waste cost is to be charged amongst good products. So first we will allocate. Now, if you will charge the total 1000 kgs raw material amongst A, B, and waste, waste does not have the capacity to bear any cost. The cost of normal waste is to be ultimately borne by good units. So the 200 kgs we will again allocate to product A and B in some ratio. So if this ratio is again 500 and 300, then your final answer will still be 5:3, which was before allocating the cost. But if the question says that the waste should be allocated amongst A and B in equal proportion, equal amount, so 100 kgs for A and 100 for B, then the ratio would have been 600 and 400. 1000 kgs of raw material is processed, and therefore we have a cost of 8,000. So we took 1000 kgs of raw material X, which was costing us 5 rupee per kg. So the material cost comes out to be 5,000 rupees. On that, you start employing labor, which charges 2,000, as well as overheads. So after employing wages and overheads, the total joint cost. So you started here with raw material, 1000 into 5, and you started processing it. You incurred 2,000 rupees of labor, plus 1,000 of overheads are also incurred. So till now, 8,000 rupees is incurred, and then at that point it gets split into product A and B. So if we follow the physical measurement, 1000 kgs of raw material was used. So we will see amongst this 1000, how much kgs on physical measurement, how much kgs of A, and how many kgs of B. So 800 and 200. So we have the ratio of 4:1. So if 8,000 rupees joint cost is to be allocated, the share in joint cost for product A would be 6,400 rupees, and the share of joint cost for product B would be 1,600 rupees. The joint cost would be allocated amongst product A and B as 6,400 and 1,600. However, when you undertake a process, you have a lot of times some wastage. Yes, then if question is saying specifically to allocate it in some other ratio, then that is applicable, not the ratio that we will calculate for wastage. Normal wastage sale, when we received any amount, the both A and B will not taken in A and B right now. Yeah, so if you divide 8,000 by 1,000, it is 8 rupee per kg, 800 into 8, 6,400, and 200 into 8, 1,600. And if the wastage realizes something, yes, if the waste will realize something, that can be subtracted from the share of joint cost. So 8,000 minus amount realized from the waste. True, right? So now I hope this is clear. This is how you're going to allocate the joint cost if you are following the physical measurement method. Next, let us talk about the net realizable value. If waste is sold like a scrap, we will subtract it because the joint cost is not exactly 8,000. You have recovered something. So whatever you have recovered, you will subtract it. All right. Let's talk about the second method, which is net realizable value. At split off point. I'll take another example. So no previous figure should be considered here, right? Welcome. Okay. You process some raw material and after a point, three main products emerge. Let's say X, Y, Z. So XYZ becomes main products or joint products. The total pre-separation cost or joint cost is, let's say, rupees 20,000. So our job is to divide. The whole question is about dividing. I'm coming on to all the methods. So if one is not applicable, the other will be. So if you cannot measure how much is the quantity contained in the final main products, we will follow some other method. So there are three main methods that we talked about. We also have a technical expert surveys. So if we are not able to find out any method, or if we find that this is unjustified to charge to the joint cost in this ratio, it's not appropriate, you will use technical estimates. Apart from this, there is market value at sales point, split off point, market value after further processing, contribution margin approach, or average unit method. So if we have total pre-separation cost or joint cost, which may also be called both, as 20,000 and three products emerge, X, Y, and Z. So you have prepared a cost sheet. So you know how do we calculate what is the proper steps in the cost sheet. So first you have the costs, production cost. Then you add to the production cost, selling and distribution expenses. Your total cost of sales emerge. To this you add some profit margin, and then you have your final sales. So in this here also, first we will have pre-separation costs. Cost will be divided into two parts. When you have joint cost, a question of joint cost or joint products. So you will have pre-separation cost, you will have post-separation costs. This will give you the total cost. On this, maybe you will add some selling and distribution expenses. Then comes your total cost, plus you will add some profits, and then you will have your sales value. So here our job is to find out this figure. We start working from backwards. So X, Y, Z, all three are said to be sold at, let's say, 15,000, 10,000, and 40,000. This is the sales value of XYZ. So what has happened? You had processed. After some time, you had three products, which are X, Y, and Z. All three are joint products. Then you further process it. Okay? All three. So you incur some other expenditure here, and then you sell them. Some profits or selling and distribution expenses may also be given for each product. So then you sell them at 15,000, 10,000, and 40,000. So we have three information. One is profit, one is selling and distribution expense, one is post-separation expense. So this will definitely be given if the products are subsequently processed and then sold. However, profit margins or selling and distribution expenses may or may not be given. So if you have these three information, you will work backwards. First, separate the profit, you will get the total cost. Then deduct from that selling and distribution expenses. You will end up getting the total production cost. And then you subtract the post-separation cost. So you will get the share of the joint cost. Okay. So here, let's say XYZ were sold for 15, 10, and 40. Post-separation expenses were let's say 10,000, 2,000, and 33,000, right? So these are the post-separation expenses given. So we don't have any information on profit. We don't have any information of selling and distribution expenses. So how are we going to allocate the 20,000 to X, Y, and Z. Statement of allocation of joint costs. So either you can prepare it product, joint products are X, Y, Z. Sales value 15,000 rupees, 10,000 rupees, and 40,000 rupees. Post separation costs. The post separation costs are 10, 2, and 33,000. So sales value minus post separation cost is the ratio in which you will divide the share in joint cost. So 15 minus 10, 5,000. 10 minus 2, 8,000. And 40 minus 33, 7,000. So this total also comes out to be exactly 20,000, which I have deliberately kept as 20,000. So you will divide the joint costs amongst product X, Y, Z in the ratio of 5:8:7, and which comes out to be exactly 20. So 20,000 would be allocated to X, Y, and Z in this ratio. Okay. So what has happened is after subtracting the post-separation cost, right, 5:8:7, so total will become 20,000. So 20,000 is allocated in the ratio of 5:8:7, and the total is also 20,000. But here, if you look at this, X, Y, Z, all three do not seem to have any profit element, do not seem to have any selling and distribution expenses. So what will happen is, if there is some profit given, continuing with the same example, if profits are also mentioned and if selling expenses are also mentioned, and if post separation costs are also mentioned, all three are mentioned, right? So let's take again the same example, but this time I am keeping the selling price of XYZ separate. So sales value is, let's say, 80,000, 60,000, and 30,000. Profit is given 20% on sales. So 16,000 out of 80,000 is profit, 12,000 on 60,000 is profit, and 20% of 30,000, 6,000 is profit. So when you subtract the profit, you get total cost. So the total cost of sales comes out to be 64,000, 48,000, and 24,000. Selling and distribution expenses are also mentioned. Let's say at the rate of 10% of sales. So another 8,000 of the selling expenses should also be subtracted. 6,000 of selling expenses should be subtracted from here, and 3,000 of selling expenses should be subtracted from here. 56,000 is the total cost of production for X. 42,000 is the total cost of production for Y, and 21,000 is the total cost of production for Z. Then you have the information of, let's say, post-separation expenses also. So you will subtract post-separation expenses. I'll pick up this from here only. Post-separation, 10, 2, and 33. That will give a loss to product B. Let's change that. So less post-separation expenses. They are also given. All this is examples here. No figures I have picked. I have assumed them all. Profit 20% on sales, selling expenses 10% on sale. So your total cost of all the three products is there. Sales value is also given. Yes, it is given. Everything is given. So post-separation expenses, let's say, is 30,000, 20,000, or 22,000. To make calculations a little easier. Let's say 36,000 is the post-separation expense, 22,000 is the post-separation expense, and 11,000 is the post-separation expense here. So when you subtract this, you get a ratio of share in joint cost. $20,000 ratio 20,000 ratio 10,000. So this total is 50,000. Now, if all this information is given, the share in joint cost should be 50,000. But our joint cost was only how much? 20,000. So if I pick the joint cost from the previous example, joint costs were 20,000. And after having done these calculations, XYZ, sales value, profit, selling expenses, and total cost of pre-separation and post-separation, I end up getting the joint cost as 50,000. But we don't have the joint cost of 50,000. Therefore, the joint cost is not 20, 20, 10, but this is the ratio in which the joint cost will be allocated. So share in joint cost will be 20,000 would be divided in the ratio of 2:2:1. So 20,000 divided by 5. 8,000 would be the share in joint cost for product X. 8,000 would be the share in joint cost for product Y. And 4,000 would be the share in joint cost for product Z. Right? So that means somewhere some information is not complete here. Otherwise, if you have the profit, selling expense, and all the cost, it should exactly match to 20,000, but it is not matching. Therefore, there is a difference of 30,000. This 30,000 may be somewhere some other type of expenses. So maybe administration, maybe some other expenses which are there, which are not clear from the given question, right? So if this total comes out to be 20,000, it automatically becomes your share in joint cost. But if this total does not become 50,000, it is 30,000, even 10,000, something apart from 20,000, then this becomes a ratio in which the joint cost must be allocated. Is this part clear? So first one was your physical measurement, where you have the physical number of how much kgs of weight is used in joint products. So you will allocate it in that ratio. First part. So 1000 kgs, 800 of A and 200 of B, 4:1 is the ratio in which joint cost must be allocated. If there is waste, waste can be reallocated to main products, and after that, we will share the joint cost in the ratio of physical measurement. But if no physical measurement is available, we simply know that the three products are sold at this value and you have incurred some expenditure even after separation, then you will follow the net realizable value method at split off point. So we have the realizable value or the sale value after processing, further processing. So we want to get to the net realizable value at split off point. So what we will do, we will work backwards. We'll pick up the sales value and whatever the information we have. So if it is profit is available, selling expenses is available, and post separation, all three are available, you will subtract them in this order. After having subtracted all three, what you get is the total balance remaining for product XYZ in cost. If this total comes out to be 20,000, then this becomes share in joint cost. So you don't try to have ratio of share, just write share in joint cost. But if this total does not come out to be 20,000, like here it is coming out to be more than that, 50,000. So you will call it share of ratio of share in joint cost. And then 2:2:1 becomes your ratio, 20,000, 20,000 and 10. So you will divide the joint cost of 20,000 in the ratio of 2:2:1. So the share in joint cost for product X, Y, and Z becomes 8,000, 8,000, and 4,000. Okay, interesting, Mithili, but see, the whole crux of this chapter is to allocate the joint cost or pre-separation cost amongst various products. So if that is also given, there is nothing for us to do. So that will never be given. That is what you have to calculate. But yes, just in case if it is given, then obviously nothing else is remaining. Post-separation cost will be given in the question. So what it is said here in this example, that you took some raw material and after having processed that raw material, you got three different products, X, Y, and Z. So that were the three joint products because all three products were important. And once they got split into X, Y, Z, you further processed them. So this, how much cost you incurred in further processing, this is given as 10, 2, and 33. Sales value is given. Post separation, split off point is after split off time point. What expenses you have incurred, that is also given. So in order to allocate the pre-separation cost or the joint cost of 20,000, what we will do is sales minus post separation, and you will get a ratio in which joint cost is to be allocated. But here, since the total comes out to be exactly 20,000 only, this doesn't become a ratio, it becomes the share in pre-separation cost. 5,000, 8,000, and 7,000. So we don't know how much raw material was introduced, what is the raw material contained in the product X, how much raw material is contained in Y, how much raw material is contained in Z. So we cannot apply the physical measurement method here. Therefore, we went to find out the net realizable value. Yes, pre-separation cost and joint cost are both the same thing. These are two names here. We can call it either pre-separation cost or we can call it joint cost. So before the products get separated or cost up to split off point, that also you can say. So until and unless these products are separated, whatever the cost you incur on it is called joint cost or pre-separation cost or cost up to split off point. All three are same. So in this question, no profit element, no selling and distribution is given. So we simply subtracted from the sales value post separation cost and we found out the proper share in joint cost, which came out to be by chance 20,000. So there's no need to say ratio. You can simply say share in joint cost 5,000, 8,000, and 7,000. However, if profits are also given, selling expenses are also given, so you will work backwards and your statement will be vertical, not horizontal like this. So we prefer to have it vertically. First, you write down the sales value, then subtract the profits. You will get the total cost. Then if selling and distribution expenses are also given, subtract them. You will get the total cost of production. From the total cost of production, you will deduct the post-separation expenses and you will arrive at some figure, right? And after arriving that, if you look at the column of the total, if this turns out to be 50,000 and 50,000 is not the joint cost, it is 20,000. So this does not become share in joint cost. This only becomes the ratio in which the joint cost is to be allocated. You will take the totals here also, not just towards the end. So sales value 80 plus 60, 140, 140 plus 30, 17. Your profit is 34,000. So your total cost of sales should be 1,36,000, in which the selling and distribution expenses should be 17,000. Therefore, your total cost of production should be 1,19,000, in which the post-separation costs are 36 and 22, 58, 69,000. So the figures for joint cost is 50,000 pre-separation or joint cost is 50,000. But because our joint costs are only 20,000, therefore this becomes the ratio in which joint cost is to be allocated. Right. So if you try to prepare an account here, you will find that in totality 30,000 is missing somewhere. So there has to be something which is 30,000, which is not mentioned here. So maybe you can take it as administration expenses or anything. All right. Now, if in this question, if profit was missing, we will ignore it. And we will start with 80 minus 8 and so on. So this will come out to be another 84,000. If selling expenses are missing, you ignore that. So whatever is missing, you have to ignore that. And whatever is given, you have to take that. This is the best way in which you can reach closest to the share in joint cost. Exactly tracing it may be not possible, but this is the best you can allocate it to joint costs, right? Okay, I'll take an example here from your real life. Just think about it. You are three friends, right? And you go to a restaurant and let's say A orders a Coke and drinks it completely. B orders let's say burger and eats it completely, and C orders a pizza and C eats its pizza on its own. So let's say the total bill comes out to be 1800. What will you do? So one of the best method would be A pays for the Coke, B pays for the burger, C pays for the pizza. However, if you have shared amongst yourself the Coke also, the burger bites also, as well as the pizza segments also, what will you do? All three of you have consumed. So what will you do? You will share the bill amongst the three of you as 600 each, right? So it is not possible to trace exactly who has eaten how much. So that is the best way in which the bill can be split. Now, if you think, then if someone finds out that no, this is not the right way, why? Because A was having a fast, why should he bear for the burger and pizza? Then it becomes a technical estimate. Otherwise, you are not getting into the very detail of how much was the segment of burger that you ate, what chunk did you eat, or the size of the pizza segment you eat was smaller than the size of the pizza segment A8 or B8. So nothing like that. So this is just a best estimate in which you can split. But if you have some, then after having split, A feels he's being not justified, then comes technical estimate. Okay, A had a fast, so ignore A. Let A pay 100, and the remaining 1700 should be split amongst B and C, right? So similarly, if there is a joint cost and it is to be split amongst some customers or some joint products which emerge out of the processing, there are some methods. No method will give you exact calculation. They will all be closer, approximate, and in different circumstances, different methods may be more appropriate or more suitable. Okay. So this was your method of net realizable value. What we do is, right, Minu. So what we do is we can allocate. First is physical measurement. So when you know exactly how much kgs of raw material was input, whatever the units, kg, ton, anything, and what was the output in terms of physical measurement only, it is one of the best ways. However, it is not necessary that wages and overheads are also incurred in proportion to the weight of the product. So it's just a good estimate. Second is net realizable value. There again, you work backwards from the sales value and three particular elements like profit, selling expenses, and post separation. Whatever is given, you subtract that backwards and you reach out to a share or a ratio of share in joint cost. The third method is, before I begin with the third method, let me make one clarification. When you have three products emerging from a joint process, you get three joint products. It is not necessary that both A, B, C are possible or feasible to further process. It is not necessary that it is feasible to process all three. It may be possible that it is possible to process A and B further. C is further no more longer processable. So you have to sell C at that point only. So if you do this kind of question, C will have post separation cost nil. Okay. Further, another important thing is, even if all three are feasible to process further, it may not be the right decision to process them further. So maybe it's appropriate to process A further and C further, but B should be not processed here further. Though it is possible, it is feasible to process B further and sell it. But we find it more optimum to not process B and sell it as it is. So it's not necessary that if post-separation costs are there and if post-separation cost for one product is missing, that means the question is wrong or there is something missing. It is possible that C is not further processable, B is not further processable, or maybe final decision is it's not feasible or it's not advisable to process B further. Let's sell B as it is. Okay. The third method is the contribution margin. Sorry, the third method is, which I have explained, technical estimate, right? So in technical estimate, what happens is, let me take an example. You take a piece of gold and process it. After that, you prepare. This does not look like a gold. This looks like a human being. Let me make a gold bar. So let's take a piece of gold and then you start melting it and processing it, and then you end up making two different rings. So let's say you took gold worth rupees 1 lakh and you prepared two equal rings from here, which is of equal weights. So if physical measurement would have been there, you would have known that the ratio of joint cost should be equal, 50,000 and 50,000. But then you further processed it and you embedded a simple stone on this, okay, which was for, let's say I'm not giving you the value here. And then finally, this ring was sold for 70,000. And here also you further processed it and you embedded a very precious stone, let's say a diamond here or a ruby or something. And then this was sold for 4 lakh. So what happens is, if you take the sales value and you don't know the further processing cost, right? So it becomes the market value after further processing. Market value after further processing. So the market value after further processing is 70,000 and 400,000 or 4 lakhs. So if 7:40 is the ratio in which you allocated the joint cost or pre-separation cost of 100,000, will it not be very inappropriate? So if you did it in this way, most of the cost would be incurred here, let's say 83, 84,000. Rough idea. Okay, I haven't done exact calculation. And 17,000 is allocated to this, right? So what happens? It's very inappropriate if you had this information from the beginning that one ring is sold for 70 and one ring is sold for 400 lakhs, 400,000. Total joint cost incurred is 1 lakh. So if 7:40 is the ratio, this would be very inappropriate because both the rings have incurred 50-50. So when this comes out, maybe you call a technical expert. He assesses the value of the stone and he says the stone was 10,000. Then he assesses the technical estimate for the value of diamond, and diamond he says it's worth 3,20,000. Okay. So this technical estimate said that you should then calculate the value of this. So you have now information of further processing cost in a sense. So the ratio becomes 70 minus 10, 60, and 4 lakh minus 320, 80. So it's 6:8 or 3:4. So at least you are not grossly wrong. 17 and 83 is very wrong. 3:4 is at least closer. Okay. So the more refined you want, the more exact you want to reach the joint cost or the share in joint cost, the more efforts you will incur in finding out how much should be the cost. So technical estimate will be a proper survey of experts who will evaluate and will try to reach as close possible as to actual joint costs incurred. So these were the three prominent methods: physical measurement. I hope it is clear. The second will be the net realizable value, and net realizable value not after further processing, net realizable value after at split off point. So for this, what you do, you work backwards from sales, and as much as information you have, you take that. And the third is, yes, the technical estimates. So some processes can be too complicated. It's not possible to find out what is the uh, physical measurement or what is the net realizable value at sale or something. So you go for technical estimates. Then we have some other methods. Two of them I'll talk here only. So one is market value after further processing. And market value at split off. So these two are comparatively very easy. Why? Because if I take the same example, what was the market value after further processing for the two rings? 70,000 and 400,000. So you took this ratio 7,000 and 400,000 and you came out the share in joint cost in the ratio of 7:40. So this was market value after further processing. So if we take the example of gold rings, you get the market value after further processing is the ratio of 7:40. And now you see that this is very inappropriate. So this method is not working at all, specifically if the further processing costs are totally different. So in this you have incurred only 10,000 and on the second ring you incurred 3,20,000. So when further processing costs are highly not comparable, or there is a huge difference between what further processing costs you have incurred, the market value after sale processing is not applicable. So market value after further processing is not applicable, particularly if there is disproportionate. Anil, if you have anything to ask, please paste it in the chat window. Disproportionate further processing cost. And it is also possible, like I said, that maybe all the joint products which come up, they all are not possible or feasible to further process. So if you have three products, only two of them are further processed and one of them is not, then how can you charge the final sales value after further processing to the three products? You cannot use that ratio. So in two circumstances, and generally market value after further processing is not a good method because net realizable is what you should reach to this using market value after further processing. So if you have information of profits, selling expense, and further processing cost, they should definitely be subtracted. But then this method is applicable when you have no other resort and when you know that all the processes are subject to nearly same kind of further processing. You can use this. Now, market value at split off point. So if you are aware here that this ring could be sold, if we don't want to put a stone on this, if this could be sold for 55,000, and if we don't want to put another diamond on this could also be sold for 55,000. So this is the market value at split off point. So you have both the information that if you want to sell it as it is, you can sell it. It will be sold for this price. And if you want to further process it, okay, you can incur this much expenditure after further processing. And then you can sell it at 70 and 400,000. So if market value at split off point is also given, this is a good method. Okay. So you'd have both the information. So you will use, that means the product which emerge in the process have ready market. This will be applicable when the product have ready market as it is also. So they are sellable in the market and you know at what price. Market value of product is known. It will be a good method. So we can see here also we got the ratio of 1:1, which is the best ratio. Then one method is your average unit cost method. Okay. It is inappropriate. This one, no, market value after further processing, this is inappropriate when the further processing costs are disproportionate, or when there are different products, a few of them are not even subjected to further processing cost. So you can see here, if we use the market value after further processing, the ratio comes out to be 7:40, which is grossly wrong. Because I've told you that 100,000 was the gold and 50,000 was the two rings molded. So the which are exactly equal. So, and they have been molded exactly using the same process. So this means that 50,000 should be the share in joint cost. But if you look the market value at the final sales value after further processing, it's totally wrong, 17 and 83 roughly. So what does it mean? This is not working here. Why? Because in the first ring you have used a stone worth 10,000, and in the second ring you have used a diamond worth 3,20,000. So if you use different, further processing costs are totally different. On one you incur very little and on the other products you incur very high further processing cost, then this method is not relevant. Further, if there's one or two products which are not even subjected to further processing costs, then market value is after split off is better than market value after further processing. Why ICAI is recommending? Because it's basically talking about net realizable value, which starts from market value after further processing. So that is recommended. And here this method will be recommended when further processing costs are also exactly proportionate and all the products are subjected to further processing cost or all are not subjected. So there is no difference between different products. Okay. Is it correct? Is it clear, Anil, now? All right. So let's come on to next method, average unit method. I'll take an example for this in the sense, let's say we have two products, X and Y, which are emerging from the joint process. So a joint cost of 10,000 is to be incurred. Joint cost is 10,000 and you have two products, X and Y. Raw material was 1,000 kgs. 800 kgs was used on X 200 kgs was used on Y. So if you would have gone for physical measurement, the ratio would have been 4:1. Agree? ₹10,000 allocated amongst X and Y, 4:1. However, further information is given. What is how many units of X and how many units of Y are made? So let's say 100 units of X and 100 units of Y are made. What does this imply? This implies that 1 unit of X is for 8 kgs and 1 unit of Y is of 2 kgs. But if you were following average unit method, the ratio would have become 1:1. 100 units of X, 100 units of Y. So what is the total cost? 10,000 to be allocated amongst X and Y in the ratio of average unit method. So 1:1. Both would have been charged 5,000 each. And you know, this is wrong. It should be 4:1 because we have the physical measure. But if we don't have the physical measure, we simply have, if we don't have the physical measure, we use average unit method, but average unit may not be the appropriate method. Particularly, once again, if the quantity of physical raw material contained in units is different. If one of it is very heavy and if the other is very light. So once again, if I take the example of the gold, and if you get 2 rings, so if 2 rings are there, equal rings, so if you take unit method, once again, it comes out to be 1:1. But if this ring was 4 times heavier, okay, so this had, let's say, 8 grams, this was only of 2 grams. Then once again, 1:1, 50-50. Is this the right way? No. Then we should have physical measurement is better. 8 grams goes here, 2 grams goes here. Let's say 10 gram was the total gold. So the ratio should be 4:1. 80,000, 20,000. But if you will use average unit method, it comes out to be 50-50, which is wrong here. So average unit method will be recommended where? When the physical content or the size or weight of all the units is more or less same. Okay, so this is your average unit method. All the methods are clear now? Quickly, a quick recap. So the whole chapter or the whole concept is that you have taken some raw material, incurred some expenses of wages, overhead, direct expenses on this, and you start processing the material. After there comes a point when this raw material gets split into different products. This point is called as the split off point, and all the expenses incurred till this point are called as joint cost, pre-separation cost, or cost up to split off point. So the whole chapter talks about how this total cost will be segregated or allocated or apportioned between products A, B, and C, where A, B, C both can be main products. So they will be called joint products, or one of them is main product and the other is a byproduct. In real life, yes, very much, but in exam, you don't have to worry, you will be mentioned what you have to do. So the whole crux is to allocate the joint cost amongst the different products. And it is possible that A is the main product and B and C are the byproducts. So we have to divide the cost up to split off point, joint cost or pre-separation cost or cost up to split off point also. This is to be allocated. So we have done some methods. We have done some examples of the industry. One method that is left is contribution margin. I'll take it here. I was sure. So we've taken the example of sugar industry, sugar and molasses. We have taken the example of crude oil, petroleum, kerosene, diesel, lubricants, wax, yarn, asphalt. Many things emerge when you process crude oil. And then there was the different methods in which you will allocate this. So the major methods were physical measurement. Net realizable value will be the most important as far as exam point is concerned, as well as technical estimates. And then we talked about average unit method. We talked about market value after further processing, market value at split off, and one more method that is left is contribution margin. This method is particularly relevant when, I request all of you to be on mute, please. Relevant when fixed cost and variable cost both are given. When both fixed costs and variable costs are given. So let's say you have product X, let's say 100 kgs, and it could be sold at the rate of 8 rupees. So the sales value of product X is 800 rupees. You have product Y, 500 kgs, and let's say this could be sold at 2 rupee per kg. So the sales value of this is 1000 rupees. Variable costs are given. For example, 1800 rupees, and fixed costs are also given. I'll keep it 900. And fixed costs are given 500. So what is the best way to allocate the joint costs of 900 plus 500? That is 1400 is to be allocated amongst product X and Y. So we use because the joint costs are segregated into variable cost and fixed cost separately, we will try to find out the variable cost per kg. And we will find out what is the contribution. So first we will have a working note where the variable cost of 900 would be divided amongst 600 kgs. So the variable cost is 1.5 rupee per kg. Right? 900 divided by 600 kgs. So it is 1.5 rupee per kg. Now you will take product X and product Y. So product X is sold for 8 rupees. So 8 minus 1.5, it can give you 6.5 rupee contribution per unit. But we will take contribution in totality. So product is X and Y. Units are or kgs are 100 and 500. I will give a break in 2 minutes if that is what. Sales minus variable cost is contribution, right? So it is 100 kgs and it is 500 kgs. Next, you have the sales value, 100 into 8, 800, and 500 into 2, 1000. And from this, you subtract the variable costs. So it is 1.5 rupee per kg into 100. It is 150. 1.5 rupee into 500. It is 750. So after subtracting the variable cost from sales, you get contribution as 650 is to 250. So this is the ratio. 65 is to 25 or 5 and 13. Ratio 5 is the ratio in which fixed costs would be allocated. So what are the fixed costs? 500. You will have 500 divided by 18. The ratio is 27.77 into 13. So 361 goes to product X and the remaining goes to product Y. So this is the ratio in which the fixed costs would be allocated. Okay. Now, why this method is good? Let's say I have a product. I process something for 2000 rupees and the joint costs on product X and Y are, I know exactly to be 1000 each. These are the joint costs. Okay. However, product X is sold for 30,000 and product Y is sold for 1200. So I do agree that the joint cost should be shared in the ratio of 1:1. But we also sometimes in allocations see who has the capacity to bear more. Now, product X is showing us exhibiting immense amount of contribution. Okay, so 1000 and 1000 are the cost. So variable cost is same. Let's say 50 paisa per unit. So 500, 500. So after having subtracted 500 each, the remaining variable cost should be, if this can be sold for such a high price, that means it has the capacity to bear the cost. So why not make both the products profitable and allocate the fixed cost in such a way so that the product which has a higher contribution margin is bearing the higher cost. Okay, so that's the logical concept here. Yeah, only fixed cost is allocated in the ratio of 13:5. Only fixed cost. And then after you have allocated the fixed cost, how will you calculate the share in joint cost for X? Variable cost plus fixed cost. So 150 plus 361, 511. Share in joint cost of Y, 750 plus 139, 889. So this has made both of them profitable, you see. If you would have taken some 800 minus 511 is profitable and 889 minus 1000 is also 1000 minus 889 is also profitable, right? So this is the way in which you can allocate the fixed cost amongst the two products using contribution margin approach. This method is applicable when you have variable costs as well as fixed costs. All right, team, you can take a 10 minutes break. We'll resume after this with the question. Conceptually, I have tried to explain everything. Now there would be nuances which we will cover when we take up the question. Okay? Yeah. Thank you. So it's break for 10 minutes. All right, team, shall we start? Let me sum up the entire thing. Uh, let's take an example again. Where all the methods would be summed up in a single case. So let's say I take 100 kgs of raw material and start processing it. The total joint cost are 50,000 and two raw materials, two products emerge from this P and Q. Both P and Q are 50 kgs each, but one unit of P is of 10 kgs. So we have 5 units of P and one unit of Q is 5 kgs. So we have 10 units of Q. P is sold at the rate of 20 rupee per unit and Q is sold at the rate of 15 rupees per unit if they are sold as it is. However, further processing costs were incurred, let's say of 10,000 on P and 40,000 on Q. So they were finally sold after further processing at the rate of let's say 500 rupee per kg per unit, and this was sold at the rate of 600 rupee per unit. There was a profit of 2,000 on product P and there was a profit of 2,000 on product Q. So all the information, this kind of information will be given and you have to use various methods in which you can allocate the joint cost. So first method, physical measurement, if I use, what would be the joint cost? 50 kgs each. 100 kgs is the total raw material, 50 kgs is. So the ratio will come out to be 1:1, right? Second method, if I use net realizable value, I'll do that calculation in a while. Let's talk about other simple methods first, which are directly available. Technical estimate is not required. Whatever, let's say we are getting good. So technical estimate means some expert will figure out in what ratio it is to be divided. So if he says 5:1, we will follow 5:1. So technical estimate comes out to be, let's say, 5:1. So this you will never have to calculate in your exam or your questions will not be on technical estimate because that's not your job. If I use market value after further processing, so 500 rupee per unit and 5 units. So 500 into 5, okay? This is 500 units, rupee per unit and 5 units. This is your fourth method. 500 into 5, 2500 ratio 600 into 10, 6000. So that would be the ratio if you use the market value after further processing. Fifth, if we use the market value at split off, then the ratio is 20 rupee per unit and 5 units. So it's 100 ratio 15 rupee per unit into 10 units, 150. So this is market value at split off. This was market value at after further processing, right? Contribution margin I'm not taking. If I take average unit method, so the units are 5 and 10. Okay, then these two are applicable. So then it becomes 5 is to 10 or 1 is to 2. So all are giving different answers. This is giving 2 is to 3. This is giving 1 is to 2. This is giving 5 is to 12. This is giving 5 is to 1. This is giving 1 is to 1. Now let's see which one is the best. Let's say this one is the best. What will this give? So for this, you start with sales value at split off point. 500 into 5, 2500 for P, and for Q it is 600 into 10, 6000. Then you subtract the profits because you are aware of it. So it's 2000 and 2000. My figures are not very appropriate here. So I'm not getting I will get something in negative. Total cost 500 and 4000. Further processing cost is 10,000. So let me just increase the values here by another 10. Okay. So this becomes 25 minus 2, 23,000. And 60 minus 2, 58,000. For example. Okay. Further processing cost minus 10,000 and minus 40,000. So share in joint cost, this will be a ratio. It is 13,000 and 18,000. So this is the ratio of share in joint cost because 18 plus 13 is not 50. So you will divide 50,000 in the ratio of 13 is to 18. Okay. Right? So you can see this comes out to be less than 50. Therefore, this cannot be share in joint cost because joint cost total is not 31,000, it is 50,000. So this is only the ratio in which 50,000 has to be apportioned. So these are different methods. Just have a look at it. I think it should be clear. Most of them are revised except the contribution margin. Okay. So in physical measurement, you know exactly 100 kgs split into 50 kgs each. In average unit, you don't see the kgs because you don't have the measure of it. Therefore, you use the number of units, total units 15. So 50,000 would be divided by 15 and 5 units is to 10 units, 1 is to 2. Then you have net realizable value where you take the sales value and from there you subtract the profits, the post separation cost or further processing cost, and you kind of arrive at the share in joint cost in the most reasonable fashion. Then you have market value at after split off or after further processing, which is 5,000 rupees into 5 and 6,000 rupees into 10. or market value at split off, which is 20 into 5 and 15 into 10, or the average unit methods, 1:2, so on. So only one method, contribution margin, is not here because I have not bifurcated 50,000 in the ratio of in some fixed and variable costs. Okay, so hope this is clear. Now we're ready to take up some questions. A company processes a raw material in its department 1 to produce 3 products, B and X, at the same split off stage. So I think it's A, B, and X, sorry. During a period, 180,000 kgs of raw material were processed in Department 1 at a total cost of 12,88,000 rupees, and the resultant output of A, B, and X were 18,000 kgs, 10,000 kgs, and 54,000 kgs. So 180,000 kgs is processed, but the output is only 28 and 54, 82,000 kgs. So the rest, we may assume, must have been lost in the process. A and B were further processed in Department 2 at a total cost of 180,000 and 150,000 respectively. So far, what do we have as our information? 180,000 is the input, which is giving us 3 products, A, B, and X, 18, 10, and 54,000 kgs. $1,288 is the joint cost. So this is to be allocated amongst ABX. And further processing cost for A and B are 180 and 150. These two are further processed in Department 2. This job was done in Department 1. So most of the relevant information so far that I have read from the question, I have pasted here in one single step, right? This was the most relevant information. Then X is processed in Department 3 at a cost of 108,000. There is no waste in further processing. Important. This is also processed for 108,000. And important line is that we have seen that substantial amount was lost in the process. Like 180,000 kgs does not become 82. That means 98,000 is lost. But it is saying that after further processing, whatever you have, you still get same 18,000 kgs, same 10,000 kgs still, and same 54,000 kgs. So there was no further loss in process. These is the details of sales affected during the period. Quantity sold for A 17,000, B 5,000, X 44,000. Whereas what we should have 18,000 of A, 10,000 of B, and 54,000 of X. So one important information that we get from this difference is that there are closing stocks. There are closing stocks in each process. So for all the products A, B, and X, there are closing stocks. Now that's why this line becomes very, very relevant. No waste in further processing. Otherwise, what we would have assumed is out of 18,000, 17,000 is processed, which means 1,000 is further lost in process. Out of 10, 5,000 is processed, 5,000 is lost in process. 54 minus 44, 10,000 is lost in process. So that would have become the assumption had this line been not given, that there is no waste in further processing. So because of it, we understand that 17, 5, and 44 is sold. Yes. So there are closing stocks. Now this becomes very important here that if there are closing stocks, it's not appropriate to take the sales value of 17,000, 5,000, and 44,000. So imagine in process B out of 10,000, only 1,000 was sold, and we take the sales value from there. It will become very disproportionate. So we have to make one assumption here, and that assumption is, or rather calling it assumption, I would say, one calculation is to be done here, calculation of sales value if there were no closing stocks. Right? So what would have been the sales value had there been no closing stock? Because think about it from this logical aspect. I incur 10,000 rupees as a joint cost, and I get two products on which I have incurred exactly 5,000 each. So my joint cost should be apportioned in the ratio of 1:1. However, whatever I did to this product, I don't know, whatever it is, but I did not sell it. No sales. It's still lying with me. Whereas this I sold for 1 lakh. So if you have closing stocks here, and here you don't have any closing stock, and then if you take the sales value, you will have sales value only for the product B, right? Not for the product A. Does it mean that the entire joint cost should be charged to product A or B only? No. So we would have to take a calculation that what if A was also sold and there was absolutely no closing stock. So had A been sold, let's say it would have sold for 90,000. So this would have sold for 90,000, let's say, and this is sold for 100,000. Then in this, on the basis of sales, 9:10 is still better than 0:10, 0:1. Okay. Though we are not exactly close as to 1:1, but we are quite close, 0.9 and 1. Right? So that means you cannot take the units sold only. You have to make a calculation. What would have been the sales value if the entire lot is sold. It's not an assumption, it's a calculation. Why it's not an assumption? Because if 17,000 kgs can be sold for 12,24,000, you can find out the price per kg, right? And then we can say that the remaining 1,000 kgs would have also sold at this price only. So 12,24,000 divided by 17,000. It's 72 rupee per kg. Yes, this is an assumption that we are assuming that the remaining closing stock will also be sold at the same rate. That's an assumption. Assuming whatever is not sold, if it had been sold, it would have also been sold at the rate of 72 rupee per kg only. Right. Per kg or per unit, because here the quantity output is in kgs, we will call it kgs. If it was that 1,80,000 kgs is raw material is processed and we get 18,000 units of A, 10,000 units of B, and 54,000 units of C or X, then we would have called price per unit. But here it's kgs. And that's the reason we could say that 98 kgs is lost. If this is units, we could not have said that 98 kgs is lost. So similarly, you will find out the price per unit per kg for product B, 2,50,000 divided by 5,000. Okay. So we will prepare a statement. Product A, product B, product X, sales quantity is 17,000, 5,000, and 44,000. Sales value twelve 24, 250, and 792. 12,24,000, 2,50,000, and 7,92,000. Selling price per unit 12,24,000 divided by 17,000. This is 72 rupee per kg. 2,50,000 divided by 5,000. It is 50 rupee per kg. And 7,92,000 divided by 44,000. This one is 18 rupee per kg. Now, what would have been the sales value if there was no closing stock? This is the most relevant item for us. So we have found out the price per kg 72, 50, and 18. $72, 50, and 18. Okay. Selling price per kg. Sales value of entire production. So it's 72 into 18,000, 12 lakh 96,000. You can have one more row here for quantity, which is 18,000, 10,000, and 54,000 kgs. 50,000 into 10,000, 500,000 or 5 lakhs, and 54,000 into 18, 9 lakh 72,000. And also have a column of total 972 plus 5 lakh plus 12 lakh 96,000. Twenty-seven lakh 68,000. Fine. We have done most of the working here. There was no opening stock. That's so that means if the entire lot is sold, it would have sold 18,000. So whatever has been sold 17,000, it has been sold from the current production because there were no opening stocks. So if these products were sold at split off stage, the selling prices would have been 50, 40, and 10. So what we have is 72, 50, and 18. They would have rather been 50. So we are able to sell at 22 rupee more. 40, we are able to sell at 10 rupee more. And 10. So we are able to sell at 8 rupee per unit or per kg more. So 50, 40, 10 would have been the sales value at split off point. So that means A, B, and X also have ready market. It is your wish whether you want to process it further and then sell, or you want to sell it as it is. All right. 17,000, 5,000, and 44, but production is 18, 10, and 54. So in order to allocate the joint cost, it is very important to allocate them between 18,000, 10,000, and 54,000 kgs, not between what is sold. So first first step is to find out the selling price per kg of each and then apply it to the units manufactured. So apply it to 18, 10, and 54, not to 17, 5, and 44. So this would have been the sales if everything would have been sold after further processing. Now you also know so what do we subtract from this? This is the last sales value. So if you want to follow the method of market value at split off point, we would have used 50, 40, and 10, right? If we want to find out the market value after further processing, we would have used this ratio. But if we want to follow so it's saying prepare a statement showing the apportionment of joint cost to ABX. No method is prescribed here. Present a statement showing the cost per kg of each product, indicating joint cost, further processing cost, and total cost separately. Okay. Prepare a statement showing the product wise and total profit for the period, and state with supporting calculations as to whether any or all of the products should be further processed or not. So no method is mentioned, and we have post separation cost. So we will follow net realizable value. So this is the selling price of all the products if entire lot was sold. From this, if you will subtract profit, we don't have. If you subtract selling expenses, which again we don't have, then you subtract post-separation expenses, which are mentioned. So you will get a ratio in which joint costs should be allocated. So post-separation expenses are very clearly given as 180, 150, and 108,000. Right? 1,80,000, 1,50,000, and 1,08,000. So once you subtract this, what you are going to get is not exactly the joint cost of 12,88,000. So I will say this is the ratio of allocating the joint costs. This total is 180 plus 150, 280, 330, and 438. So 1296 minus 180, 11 lakh 16,000, 5 lakh minus 150, 3 lakh 50,000, 972 minus 108, 8 lakh 64,000. So this will not come out to be 1288. It comes out to be 23 lakhs 30,000 only, right? So this is the ratio in which you will allocate joint cost. So share in joint costs. 11 lakh 16,000 divide by 23 lakh 30,000 multiplied by joint cost of 12 lakh 88,000. Is it clear so far, everyone? Uh, Reason behind choosing NRV. Okay, let me complete this calculation and I will. This is 3,50,000 divided by 23,30,000 multiplied by 12,88,000 and finally 8,64,000 divided by 23,30,000 multiplied by 12,88,000. This comes out to be 6,16,913. 1,93,476. And the last one, basically, whatever it comes out to be, because when I was doing all the calculations, this also came as less than zero point 0.5. This also came as less than zero point 0.5. This also came as less than zero point 0.5. So if I write here 477,610, I see that the total will not be rounded off. And this had 0.30, this had 0.38, this had 0.18. So this is the one I will round off to the higher number, so that the total should match 12,88,000. So this is how the share in joint cost will go. Yeah, so if you take this, you see 6 plus 9, 3 is 9, plus 0 is 9, which means I'll have in the end 9, right? So the highest fraction I had was in this second one. So this one I rounded off to the next higher number. These small things really help you in exam because there is absolutely no problem of taking the totals. Otherwise, generally what happens, you start panicking if your balance sheet or anything do not match towards the end, right? So this is your share in joint cost. Now, the question is, why did I take net realizable value? In this question, if I look at, firstly, uh, I would not take the market value after split off. Market value, final market value. Why? Because there are further processing cost, 180, 150, and 18, which are different. Secondly, I cannot take the physical measurement because there is substantial loss and we cannot see in 98,000 kgs lost. Maybe some processes may be prone to more loss and the other may not be that much. So physical measurement is ruled out. Units are equivalent to kgs here only. And that I have used because the market price is different. That has been used. Another good method would have been the split off point, market value at split off point. That could have been definitely used here. So in that way, it would have been 18,000 into 50 and 10,000 into 40. And finally, how much? So 54,000 into 10. This could have been the market price. So 18,000, 9 lakhs, 4 lakhs, and 5,40,000. So this could have been another measure. But as we have sales value after further processing and there is no loss in process also, it is an indicative that the difference will not be there if you use market value at split off point or you use this method. 9 lakh, 4 lakh, and 540. Here also you have 9 lakh, 4 lakh, and 540. This one is slightly more. And product X is really getting a higher share of allocation when you are using this price because what it is giving is the contribution for product X would be the highest. That's why after split off point when we have taken, it is bearing higher cost. Okay. So like I said, net realizable value would be one of the best methods because net realizable value also ensures that you are somewhere taking into consideration all the aspects like what is the profit, what is the post separation cost, and everything. Okay, I'll give you the screenshot for the question. Question, you will get it in the notes. This should be your first screenshot. This should be your second screenshot for the solution. where we found out an interesting fact that entire production is not sold and there is no wastage assumed. So there are closing stocks. So first step was to find out the price per unit, and this statement was the first part of the solution. So you find out the selling price per unit, and then you apply this selling price to the entire lot, not to 17, 5, and 44, but to 18, 10, and 54. So you get the final sales value. From there, you subtract the post-separation expenses as we have no information of profit and selling expenses. Once this is separated, you get the ratio in which joint cost should be allocated, and you allocated the joint cost. This is one method. But in this case, 40, 50, 40, 10 could also be used. So joint cost could have also been allocated in the ratio of 9:90:40:54. Right? So first prepare a statement showing the apportionment of joint cost to ABX. This is our first statement showing the apportionment using net realizable value. Welcome. Second, prepare a statement showing the cost per kg of each product, indicating joint cost and further processing cost and total cost separately. So we have to find out the cost per unit. So what will you do is 6,16,913 joint cost per unit. I will do this calculation here only, although this should be a part of the second statement. So 6,16,913 divide by 18,000. So your joint cost is 34.2729. I'll make it 273. So 34.2730 rupee per kg. So this is your joint cost. And you can see 180 divided by 18 will give you 10. So 34 and 10, 44. 44 is sold for 72. So you can see what is the profit. Similarly, 1,93,477 divided by 10,000 is 19.3435 rounded off, and 4,77,610 divided by 54,000. So this is 8.844 something. So I'll call it 8.85. And if you will divide 1,08,000 by 54,000, it is 2 rupee per kg, 2 rupee. This one is 15. So this is the post-separation cost per unit, 10, 15, and 2. And this is the share of joint cost per unit, 34, 19, and 8. So 34 plus 10, 44, sold for 72. You can see the profit. 19.35 plus 15, 33.35, sold for 15. 8.85 plus 2, 10.85, sold for 18. So this was giving you the very high gross margin. I think your time is up. I'll explain it, how you will do. So if you can complete this question, it will be very good. Otherwise, we'll continue from here in the next session. So this part is clear, showing the apportionment of joint cost basis net realizable value, because we have seen that there are three main methods: physical measure, net realizable, and technical estimate. If we follow one of them, that would be the best. Otherwise, we move to other methods, sales value at split off point. So present a statement showing the cost per kg of each product, indicating joint cost and further processing cost. So you will prepare a statement, share in joint cost 616,913 per kg 34.27. Post separation cost 1,80,000 rupees per kg 10. Total cost 616 plus 180. So that would be the 7,96,000 something, and per unit it would be, per kg it would be 44.27. Similarly for A, similarly for B, similarly for X, which will give you the per unit cost also and total also. Prepare a statement showing the product wise and total profit for the period. So from if this sales value, now what will you do? This is the cost of 18,000 kgs minus closing stock 1,000 kgs proportionate, and then the cost of 17,000 kgs and sales value 12,24,000. You'll not take the sales value as 1296 but 1224. So when you're calculating the profit is to be calculated on units sold. So on the same rate, you will deduct the closing stocks and then find out the profit per unit. Uh, in final exam, it will be mentioned. Otherwise, 90% you will go by net realizable method. So product-wise profit is to be based on units sold, not on production. So you have to reduce the closing stocks valued at 44.27 for A, 44.27 into 1,000, 19 and 15, 34.35 into 5,000, and 10.85 into 10,000. That would be the closing stocks. After deducting closing stocks, calculate the sales, and then you will have the profits. State with supporting calculations as to why any of the product should be further processed or not. So here we will see a differential calculation. Differential calculation in the sense, what is the incremental selling price for A? It is 22. So before processing, it is sold for 50. After processing, it is sold for 72. So how much is the incremental revenue? 22. For B, 10. For X, 8. 22, 10, and 8 is what you are getting extra if you are processing further per unit. And what is the incremental cost? 10. So you are getting 22. You are incurring 10. It will give you a more profit of 12 per kg. Incurring 10. Incremental revenue is 10. Incremental cost is 15. So this product B should not be processed further. It's like I have something for 100 rupees. It can be sold for 200. So my profit is 100. But if I incur 70 rupees extra on this, so I get 220. So what is the point? Earlier my profit was 100, but now my profit would only be 50. So after having incurred additional 70 rupees, I am only getting 20 rupees more. So there is no point in further processing B because you are incurring 15 per kg, but you are getting only 10 rupee extra per kg. For X, you are getting 8 rupees extra, whereas you are incurring only 2 rupees. So that's why the difference also, that the cost was less for product X, only 9, 4, and 54. But here this ratio tilted very much towards favor of X because this became very profitable as post-separation cost was far less than the incremental revenue. So A and X should be further processed, B should not be. Right? So we'll stop our session here. And if you have any doubts from this session also, we'll take up again when I continue on 3rd March for the second part of this chapter. Right? Thank you, everyone. Bye. Have a good day, all of you. Yes, we can end.